Hi, I'm Phil Grandy at philsgang.com. People were really sucked in this week. When we had that rally on Monday and Tuesday, 1,500 points, 5%, very seldom does that happen. When that happens, that indicates a short covering rally, meaning professionals like myself who make money selling the market when it goes down, selling short, what we do is we have to buy that stock. If a stock's at 100 and I know it's going to go down to 50, I sell short. So when it gets down to 50, I have to buy the stock to make my money because I bet at 100 it was going to go down to 50. Okay, so I have to buy it at, once it gets to 50, I buy it, and that's what makes it go up. So you have to identify, okay, if the stock market rally, is it mostly professionals like me who are just squaring their positions, who are taking their profits on the shorts, or is it new money coming in? Well, I want to show you something. When you look at the S&P right here, you put the S&P up for you. Yeah, let me just pop it in here. When you put the S&P in, and let me bring it back 3 months. You can see those 2 days when we had that rally, okay, those 2 days right there in the S&P, okay. 2 days after, I mean, this is when we had the, right here is when we had the rally right there. These 2 days right there. In those 2 days, we had far more sellers. See the sellers here? We had far more sellers than we had buyers. That tells you it's a short covering rally. Now, so they snap back is what happens. It's called a snapback. When you look on the S&P and you take a trend like this, snap a trend in like this right here, all they're doing right here, there's your trend. See it? That's a trend. Whoops. Okay, your trend is right here. Okay. When this started in this big BS of this Bank of England, this rallied from here up to here. I told everybody that's as far it was going to go because we're in a severe downtrend. That's as far. So these are called snapbacks. See, snapback. These are people who shorted, taking profits. They shorted, took profits, but they very seldom will ever break out because they don't have enough volume. See over here on the left, they don't have enough volume. So 2 things you got to watch. You got to watch your volume, and what is the most important? What's the other thing that's most important? Your bond. And when you look at your bond, TLT, the 20-year Treasury right here, remember that day when they came out and they lied and they said that they're going to the Bank of England was going to pivot, and therefore Powell was going to pivot back to zero rates again. I knew that was a lie. So the bond market went from, when the bond market was coming down to this point here, if you owned a bond, you were getting crushed. The value of the bonds were tanking. But when he made that was a catalyst. When he came in and said, oh boy, we're going to go back to zero rates because pensions are getting killed and we got to drop rates to zero. I'm talking about the Bank of England. And Powell's going to do the same thing. Whoa, that shot right up here, right? Now when it shoots right up, what happens? Your yields start coming down, not up. So today, look what happened. The last few days came right back down. Now what happened? Your yields are going which way? Now the yields are going back up. So as long as you know what the bond market's doing, you know if interest rates are going to go up or interest rates are going to go down, and then you know what stocks to buy. Do I buy stocks that are friendly with interest rates going up? Do I buy stocks that are friendly with interest rates going down? It's not hard. And then watch the volume. So your volume and your bond market is the key to your success. To help with that success, why don't you join my gang, philsgang.com. Try it for 10 days, okay? philsgang.com, and it's free. Please hit subscribe, like, and share. I'd really appreciate it. So have a great weekend. And again, don't be fooled by these crazy little announcements. They're going to do anything to try to rally this market into the election. It's not going to work. See you on the charts.